Hi everybody, this is Phil Holoka from Complete Captive Management Services. Today we're launching our next three-part series on the captive financial statements. Today's conversation is an introduction to those financial statements. So several weeks ago, I suggested that the bordereau report is the most important document that an employer and their consultant should look at prior to joining a group captive. And I still stand behind that. The next most important thing are the financial statements of that captive or the group captive. Okay? So let's talk about the accounting methodologies. There are three of them. We're not going to talk about government fund accounting. We're going to focus on GAAP and SAP, which is probably a new term to many. GAAP stands for Generally Accepted Accounting Principles, and it is developed and managed by FASB. FASB stands for Financial Accounting Standards Board. Overall, GAAP is a conservative accounting methodology, and conservatism really relates to when an employer reports their financial accounts, it's got to take a conservative approach. And I don't want to get too far into the weeds on what that means, but just understand that SAP, Statuary Accounting Principles, which is managed by NAIC, which stands for the National Association of Insurance Commissioners, takes an ultra conservative approach, even more conservative than GAAP. And the reason it takes an ultra conservative approach is because of insurance company solvency. With an insurance company, it is receiving revenue from policyholders. And should a policyholder lay claim against the policy, the insurance company has to have the assets to pay for it. Therefore, that's the primary reason for the ultra-conservative accounting methodology for insurance companies. Okay? Now, if you're a captive or even an insurance company, but let's talk about captives, the captive domicile regulator is generally going to require unaudited financial statements submitted quarterly. Q1, Q2, Q3, and those are usually required to be submitted within 45 days of the quarter closure. Okay? In addition, the regulator is going to require the captive to file an audited financial statement. And remember, the auditor is an independent auditor that is at arm's length from the captive. So the captive can't inject influence on the auditor. It's got to be purely independent. And then the NAIC has its own form called the annual statement. And that form is a SAP methodology. The audited financial statements are generally GAAP because the users of the audited financial statements are generally the participants in the captive, creditors, lenders, generally those who are more accustomed to an audited financial statement format. Okay? The users of the annual statement are only the regulator. The regulator works within a statutory accounting principle environment. Okay, so if you're considering a group captive, ask for the bordereau report, but you're also going to ask for the most recent audited financial statements, as well as the latest unaudited financial statements. This is where you're going to do some comparative ratios, which we're going to talk about in 2 weeks, because you don't want to join a group captive when there are certain triggers that may question solvency. Okay? So you got to get your hands on these two things as well as the bordereau. Now, the statement of income, the P&L, is very simple within an insurance company. premiums in, losses, it flows down to underwriting profit. Now, you generally want to see a profitable number here, but it's okay if it's negative because your solvency, the captive solvency, lies in the balance sheet. For as undetailed the P&L is, the detail lies in the balance sheet. Now, within the balance sheet, you have IBNR, incurred but not reported. This is the ultra-conservative approach that the regulators want to see. This is where most of the numbers, the values that increase your liabilities. Okay? So, the balance sheet is way more important than the P&L. So, I hope this was helpful. Next week, we're going to talk about comparing the two financial statements, and the third week, comparative ratios. How do you measure one captive against the other? Until then, have a good week. Bye now.